Hi everyone, I'm Matt from Look Into Bitcoin, and today we're going to be doing a Bitcoin roundup to discuss the current market conditions. We're going to try and gain some insight into Bitcoin's recent price action and how we should consider positioning ourselves going forward. To do this, we'll be using a number of resources that are all freely available on lookintobitcoin.com, your number one source for Bitcoin information. If you haven't already, don't forget to like the video, subscribe to the channel, and turn on notifications to ensure you're receiving all of our content as soon as it's released. So right now we're just on the Look Into Bitcoin site on the Bitcoin live price page, and as we can see, it's been a fairly good start to 2023 so far. We've rallied up from the December lows of around $16,500 where the yearly opened to above $20,000, which is a pretty substantial move in Bitcoin, about 30%, which is definitely not anything we're going to complain about given the 2022 price action we had, which was pretty much all to the downside. So as we can see, pretty good start to the month so far. If we just scroll down a little further, we can get a little bit more of an overview on Bitcoin's current conditions. We can see the fear and greed index is still fairly neutral, which is actually pretty promising. Usually when we start to see a lot of people getting greedy fairly early into a rebound in Bitcoin's price, it can maybe indicate that we're maybe a little overheated and there probably isn't too much more upside available. But considering we're still fairly neutral, it's definitely a promising sign that we could even move higher. If we look at Bitcoin's comparisons to traditional market assets such as the S&P, the Dow Jones, Tesla, and Apple, we can see Bitcoin has far outperformed all of them for the start of 2023, which is again another promising sign that maybe risk-on assets are going to perform a little better in 2023, at least in comparison to traditional markets. But obviously, we'll have to wait and see how global economic factors maybe impact those conditions. If we just scroll down a little further, we could see something we covered previously, the Bitcoin price predictions. These two bottom lines we see here, the CVDD and the balance price. Bitcoin did bounce very nicely off of those two bottom bands, as it has done in every single Bitcoin bear market. So maybe another early sign that things are going to continue to the upside a little bit longer. We can see profitable days starting to look a little bit more promising. It's not just a completely horrid red line to the downside. We're starting to see some green profitable days, which is always nice. And overall, things are just starting to look a bit more up for Bitcoin, which I think we all earned given the fact we've had to endure a pretty terrible bear market so far. But if we actually have a look at some on-chain metrics, we can maybe get an even better indication of where we may be in the cycle. So first off, the realized price, one of our favorite metrics. This is taking into account the average transactional value of every Bitcoin on the network. So the last price that every bit of Bitcoin was moved at, and then we just aggregate all of that up and divide that by the circulating supply. We get the average price at which each Bitcoin was last transacted at. And as we can see, this is usually a good indication once we're beneath this that we're in the very tail end stages of a bear cycle. And Bitcoin was beneath this for a few months, but we have actually, if we just zoom in, crossed above this realized price, which sits at just under $20,000. As I film this, we're at about $22,500, but there'll be some intraday volatility between now and when it's uploaded, so maybe we'll come back down and retest that, or maybe even rally higher. Who knows? All we can say is it's a pretty promising indication that after breaking above this realized price, we haven't immediately dipped back beneath it like we did a few times in this bear cycle already. So something to keep an eye on, that maybe we even gain support on this realized price before kicking off and move higher. Or if not, we just leave it in the dust and everyone starts making a little bit more profit, which again, nothing I'm going to complain about. If we then go to the MVRV Z-score, which is actually using the realized price but then multiplying it by the circulating supply to get the realized cap, and if we subtract that from the market cap, which is just the current Bitcoin price multiplied by the circulating supply, the total amount of Bitcoins that are in circulation, and then divide that by the standard deviation or the volatility, we can see finally, after a very long downtrend, we have actually broken out of this green buy zone here, which may indicate again that we may be in the very early stages of the next bull cycle. Now, this doesn't have to mean that it's going to be up only and Bitcoin's going to rally to new all-time highs immediately. We could have a very transitionary year for Bitcoin. It could just be a slow move to the upside, maybe some ranging. It doesn't have to be anything too exciting, just a little bit of positive price action to start getting retail and institutional interest back in the space before we can really build a solid foundation for higher moves to the upside. But ultimately, this is a very promising sign for Bitcoin. Similar to that, we have the net unrealized profit and loss, the NUPL, and again, similar to the MVRVZ using the market cap, and subtracting the realized cap from that, but this is just then dividing by the market cap as opposed to the standard deviation of volatility, and this gives us a good indication of where we may be in the cycle and aligns that with what current emotions may be leading the market. So for example, the capitulation phase which we've been in, this is usually where most people give up hope, start to feel that their investments are never going to go back to where they potentially originally bought in, and that Bitcoin may be a dead project, cryptocurrencies is gone and it's never coming back. That's usually the capitulation phase and is somewhere where we've been for a few months now. And as we can see, again, we're going to see a lot of similar charts today showing a potential large trend change in these on-chain metrics, as a lot of them start to signal that conditions are changing in the cryptocurrency markets. We're now in the hope area of the net unrealized profit and loss. So of course, there is the possibility that we could come back down in this capitulation zone, but having this hope that maybe the worst is behind us is always nice to have. If we then go onto the rainbow price chart from more of a market cycle chart, something we've discussed previously, as Bitcoin actually dipped beneath the bottom band on this rainbow price chart, a lot of people were claiming that this was now a broken metric, a useless indicator, but we've actually crossed and gained back into this lower band. So still in the lowest capitulation fire sale territory. So still not a bad area to consider dollar cost averaging. Just because we're up 30-40% off the lows doesn't necessarily mean that you've missed the opportunity to buy Bitcoin at lower prices. Though many people in previous cycles who wish they could have bought in at $200, and then once price was at $250, they thought the move was over before we rallied to $20,000, and again maybe thought that $3,000 was the only valid price to enter the market, and at $3,500 they'd lost all value before we rallied to near $70,000. So just because we've rallied off the lows doesn't necessarily mean that this isn't a good area to continue accumulating if your strategy suggests doing so. And definitely while we're in this lower rainbow price band, it's worth considering. But just another positive thing we can note with Bitcoin is that once we've actually regained back into this rainbow, we're not beneath this band anymore. It definitely looks a little bit more positive for Bitcoin. But given all this positive price action we've had for the start of the year, we need to actually take a step back, be realistic, and understand that there is a lot of resistance above us, a lot of selling still to be done, and a lot of choppy price action is likely. As much as we probably all love Bitcoin to just rally to new all-time highs, realistically there's going to be a lot of obstacles in the way. And for example, this is one that I think could be a big resistance point for Bitcoin. So right now we're looking at the 200 weekly moving average heat map. So this is the 200 weekly moving average, so that is just averaging out the most recent 200 weeks of Bitcoin's price action, and once we get that average we can actually see. So this can almost be seen as a long-term average, maybe fair value price for Bitcoin, and we can see in every single bear market Bitcoin has reached this 200 weekly moving average, usually found support, bounced off it, maybe consolidated around it before moving higher. And in this bear cycle, we've actually dipped beneath it and stayed beneath it for a fairly substantial period of time, which is the first time we've ever actually seen this happen for Bitcoin. So if we just zoom in, we can see Bitcoin's had multiple consecutive months beneath this 200 weekly moving average, where it currently sits at around $24,500. But we can see by the general trajectory of this 200 weekly moving average, as it's taking into account the previous near 4 years of price action, it's gonna probably still trend a little bit higher, as it's still factoring in prices of around $60,000, maybe even near $70,000. So it wouldn't surprise me if this just marginally increased for the next few months as well. So we'll maybe have some resistance at around $24,000 or $25,000, where a lot of people may see this as a point to take profit or even take short positions on Bitcoin, as they believe this is where Bitcoin may have a negative reaction in price. So this is a key area to watch, I think anyway, where we could potentially see Bitcoin struggling to break through. But on the positive side of that, if we do see Bitcoin convincingly break above this 200 weekly moving average, again, it's just another indication that potentially the trend has changed, and we're maybe going to see more of a general uptrend in price action as opposed to the general downtrend we've had for quite a while now. So along with these on-chain and market cycle charts, we can also look at some minor metrics such as the Puel multiple, which is again similar to the other on-chain charts we've seen, broken out of this green buy zone. And one thing we can actually do is line up the previous highs as we move down and see we've very much had a convincing trend change in the Puel multiple. So the Puel multiple is looking at the daily coin issuance of BTC but denominated in US dollars and dividing that by a 365-day or a yearly average of that value. So this is just showing miner earnings today compared to historically what they may have done over the past year. So when these miner earnings are down considerably, it may indicate that miners are capitulating, and this usually is a good indication that we're coming to the tail end of a bear market. And to the opposite of that, once we see exceptionally high miner earnings compared to the historic average, this usually leads to the poor multiple increasing fairly substantially and reaching this red sell zone here. But as we've broke this downtrend, this is another very convincing and very promising sign that maybe things are going to start changing for Bitcoin. And we can actually draw a similar type of downwards trend change line like we see here on all of the charts we've covered. So for example, on the net unrealized profit and loss, we can again connect and see this downwards trend changing and finally beginning this upside trend. The MVR/VZ score, similar story. If we connect the highs of this downtrend, we can see finally we've broken out, and especially once we've broken out of this green buy zone as well. It's just another nice observation we can make that can maybe give some confluence that the trend is convincingly changing. And of course, the last one we're going to cover is the hash ribbons, which has given us another buy signal. So historically, the buy signals given from the hash ribbons, which is the total Bitcoin hash rate securing the network and then giving us a 30-day and a 60-day moving average. And when these cross, it gives us this hash ribbons buy signal, which has been one of Bitcoin's most accurate and profitable signs to act on. So we can see for all of Bitcoin's price history, excluding the most recent buy signal we got, we can actually see a very positive reaction in price following this hash ribbons buy signal. And if we just zoom into the most recent cycle here, we can see we have once again gotten a very convincing indication that miners are coming back, pouring resources into the Bitcoin network to not only secure the network, but also to try and accumulate as much Bitcoin as they can. So once we see this shift in mindset and confidence in the longevity and profitability of Bitcoin from a mining perspective, this is another good indication. We can see we've had a very positive reaction in price so far. So it'll be interesting to see if this trend can continue for the rest of the quarter and for the rest of the year, hopefully, where Bitcoin maybe is coming out of this bear cycle and we can have this transitionary period of more ranging and upwards price action to maybe even kick off the new bull cycle. So just to summarize, Bitcoin has had a very positive start to 2023 with a very upwards move in January. We've rallied from around $16,500 to back above the key level of $20,000. One also thing to consider is in this most recent bear cycle is the first time Bitcoin actually dipped beneath its previous bull cycle all-time high. So in 2017, when we reached values of around $19,700, this bear cycle was the first time we've actually dipped beneath that previous all-time high. So it's a key psychological level that we've broken above there, and that $20,000 round number, which was support for a fairly extended period of time before the FTX collapse, is a really key level I feel that we've broken above. So hopefully we can keep above that and maybe even flip that $20,000 level into support in a region where buyers are happy to step in. There's also a growing sense of optimism amongst traders and investors who now believe that the worst may be behind us. And if we look at the on-chain market cycle and miner metrics, we can see that there are many indications that this may be the case. However, we do have to acknowledge that ultimately we can't know for certain that a new bull market has yet commenced. It's obvious in hindsight, but we need to plan and prepare for every possible outcome. There is, of course, always the possibility that we could even dip back beneath that $20,000 level. And depending on current traditional markets, global economic and political factors, really it's difficult to say right now exactly what the future has in store for us. But we can be somewhat hopeful as there are growing indications that 2023 is going to be a better year for Bitcoin than 2022 was. If you like this video, then please visit lookintobitcoin.com, where you can also consider becoming a site subscriber to gain access to live chats, in-depth newsletters, indicator alerts, private TradingView scripts, and more. And at the minute, we actually have a 40% discount for annual subscriptions. So if you're considering becoming a subscriber, now is definitely the time to do so. And again, in the comments down below and on social media, let me know what your thoughts are on Bitcoin's current price action and when you can foresee price going in the coming weeks and months. Thank you very much for watching, and I'll see you in the next one.